Okay, and welcome back, students who are taking financial accounting, and we're working in this series of videos on the chapter 4 short exercises, and we stopped in the last video on 10, so now we're going to pick up on number 11, and it says prepare a multi-step income statement, right? So this should be relatively easy, and if again, it's this idea of understanding concepts and application. Here's everything, okay? And I'm going to apply it. And as you're watching me apply it, you'll say, oh, okay, you'll understand that this goes here or that goes there. I mean, that's the application of it. But if you don't understand what goes on an income statement or what a multi-step income statement is, that's theory. So go back and watch and the theory videos. And to be honest with you, chapters 2 and 3, covered the income statement, creating income statements. Okay. So this here, if you're having a difficult time with this, then I suggest you go back and watch the theory videos in chapters 2 and chapters 3. I'm not going to cover a lot of it here, the theory. I'm just going to present my thoughts as usual. And if you watch those videos from chapter 2 and chapter 3, you realize that I kind of do it in a process. I deal with the heading, so I'd have the name here, and then I have the income statement, and then of course I have to have the date. And my date here would be year ended January 31st, 2014. Right? And remember, this is kind of sloppy here. So here's the name, Skates Shed, all right? Then income statement, and realize that I'm abbreviating here. Format is important, and if you watch the other videos, you'll see that, I explain that I'm doing this year ended as an abbreviation because it's for my own use, but I would actually write all of this out. So the first thing I do is put in the heading, and that's center aligned. Then I like to write revenues, and I have my expenses, and now I'm going to fill things in, right? In the revenue section here, all right, what do we have? From chapters 2 and 3, generally all I would have is just the sales revenue, one account, okay? Excuse me. However, we're getting a little bit more advanced and there's a little bit more information, right? So what do we have here? We have an account called net sales revenue, right? Now I don't like that word net sales revenue because the net sales revenue really should have had as you saw from problem 4-9, right? So go back and watch problem short exercise 4-9 for my explanation about what it means, what I think about this net sales revenue, okay? It's not just, you wouldn't just have one line item in your general ledger accounts called net sales revenue. You would have a sales revenue account, a sales return on allowance account, and a sales discount account, right? And of course that would end up in this section. So I'm not liking the way the authors created this income statement, all right? Because you just never have one account called net sales revenue. Why call it net? You would just call it sales revenue, all right? And I have to work with what I have here, and so I have to use it, all right? And then of course, after we have our net sales revenue, we have less our cost of goods sold, okay? So net sales revenue is 41,500 less our cost of goods sold of 21,000, and that would give us a gross profit. And that gross profit, all right, so this is a mathematical calculation, so I'd put it in, this is math, so you already know if you watch those videos, doing multi-step, you'd have more than one column. it's telling you to prepare a multi-step income statement, but the authors are showing it in single step. All right, so like I said, I'm not liking the solution here for this problem. Single step means only one column, single step. But when you have multi-step, you have mathematical calculations, so you use multiple columns and you do the math and put the solutions in the right-hand column. And you know this if you've watched the videos from chapters 1, 2, and 3. All right. So I don't agree with the solution here. All right, and just be aware of that. Right. So and I'm creating this multi-step because I have more than one column. All right. So I have a gross profit of 20,500. And then man, what did they do with this information? It's killing me here. Right, let's see, in the solution they have operating expense. We don't have, yeah, I have a total operating expense here. And then I have, let me see here. I have an interest expense account here. So I'm looking at my expenses, all right? Now, all right, let's see here. Okay, so instead of listing the expenses singularly, they have an account called total operating expense. All right, fine, let's work with it, right? So now I would have expenses, right? And then I have total operating expense. Now notice that the total operating expense really should have individual accounts, and then doing the math means I'd put that amount in the right-hand column. In this case here, we're talking about $6,475, okay? And then that's going to give me a profit or loss. And in this case here, that's a profit of $14,025. Now, notice I didn't take into consideration this here interest expense. And this here is building upon the structure of the income statement. Remember, and when I'm talking about the income statement, we're talking about revenue less expenses, giving a profit or loss, right? And then from that, you take out your dividends to have your net profit or loss, right? Well, as a further expansion, all right, in the expense section, all right, you really wouldn't have expenses and then a profit or loss, okay? What you would have is a total operating expense, meaning you would have, here's your expenses, okay, listed, and then you would total that up to get a total operating expense of $64.75. And then you would have other expenses. And underneath that, you would put interest expense. Okay, and so that really what you'd end up having here is you'd end up having like 3 columns, okay, because you would move, you take that and get your total operating expense here of $64.75, and then you'd have your interest expense, in this case here, $375. And that, of course, would do the math, and you'd move that to this column to have your total expenses of $68.50. Okay, and then so in this column here, all you have is just revenues less your expenses, which would then give you your profit or loss, right? Okay, so that's the way I would end up creating this here income statement. Like I said, it's not that good of an example. As a matter of fact, let me just get a blank one here, and I'm going to kind of like work through it as a quick review, okay? Because I know I'm talking out of my head here, okay? as I'm trying to work through what the information that I have, the information that's given as the solution, plus how I would do it. If I'm just looking at this problem and I don't know what the solution is, okay, this is how I would have ended up actually creating it. I'd have the heading here, income statement, year ended, and of course I'm abbreviating, but you know my thoughts about abbreviating and formatting. So 1, I'd put in the heading. Then 2, I would put revenues, and then I'd have my expenses here. Now under revenues, yeah, I'd have sales revenue less sales discount less sales return on allowance, okay, which would then give me a net sales revenue, right? And then from the net sales revenue, right now, so I would actually then take out less my cost of goods sold, which would then give me a gross profit. Okay, now from the information that was supplied, so we have a net sales revenue of 4150, okay, and then less my cost of goods sold, which is 21,000, which would then give me 20,500 as my gross profit. Dollar signs for the beginning, first number in a column. Now notice I don't have any of this other information here, okay? But I should have it. But based upon this problem, I don't. But I'm going to work through this so that you can see what the structure of the income statement should look like. So we're expanding your thought consciousness here. Instead of having just revenues less expenses, okay, to give you a profit or loss, we're expanding these sections here somewhat, okay? So we end up with a gross profit of 20,500. So the next we have our expenses, and normally we would list our expenses, and then I'd have a total operating expenses. Total operating expense. In this case here, they're just saying operating expense, and they're saying that's $6,475. Okay, so the reality is I would have a listing of all of these here expenses, and when I did the math, I'd put it in that second column. Notice that this here is actually a third column, okay? And there's a reason why I'm doing that, and you'll see this in just for a second here, okay? Because once we have a total operating expenses, we also have a concept called other expenses, okay? And under other expenses, we're going to have interest expense. Now, interest expense can be considered as part of your other expenses. As part of your normal expenses, I should say. Okay, so that could be listed as one of those in here, all right? And so then you wouldn't go through with this other expense section. However, the reason why you'll have an other expenses is because interest has to do with finances, okay? It doesn't have to do so much with the operating of the business, all right? You're not going to have interest on a supply you buy, or you're not going to have interest on a utility. If you did, like due to late payment or something like that, then that would become a normal part of the expense of the utility, or the purchase of that item. But interest expense more deals along the lines with your notes payable, okay? Your longer term or your mortgage payable, all right? That type of thing. So it's interest on your financial statements and on financial instruments. And so therefore, on the income statement, an expense is a normal part of operating, of the normal part of the operation of your business. But so that's why it's on the income statement and it's under the expense section. But businesses will segregate that out because it's a financial expense. It's not a manufacturing expense, or to be able to produce a product, or to be able to sell the stuff on your wall. So they like to treat the financial expenses as other expense. And in this case here, we have 375. Okay, so then I would have a total expenses, and that total expenses I said was 6850. Okay, and then of course that, because I'm doing the math going like that, right, putting it in the right hand column, and then I would have a net profit or loss. In this case here, it's a profit of 13,650. Okay, so that's what my income statement would look like based upon the information I've been given. Okay, or filling it all out. Like I said, obviously I don't agree with the way this problem, this solution was presented, right? They should have given you this additional information, right? But they didn't. So we have no sales revenue, no discount. All they gave us was this net sales revenue account and less cost of goods sold, right? They didn't give us any of these here expenses, but then they segregated out the interest expense, which they should have, okay? And this is what that should have looked like. But notice it's asking for a multi-step. So this is multi-step, okay? More than one column. But the solution is showing only one column, okay? Everything going down in one column is a single step, right? And if you kind of like look at that solution, you realize that that's a little bit more difficult to read, okay? And that, so the use of a multi-step, get very accustomed to it, but also realize that what I did with these sections here, as you saw me create this is what my final would look like, all right, based upon the information given. But, I should have a lot more information. We've expanded our revenue section, all right, to start dealing with net sales, cost of goods sold, and gross profit. And for our expenses, we've started moving into another aspect, which is called other expenses. Okay, so our expenses are not just simply like you had seen in chapters 2 and 3, where it's just a listing of expenses, you add them up and you had one amount here. Okay, no, now all of a sudden you have this amount and you have additional amounts here in order to get your total expenses, right? Which, oops, sorry about that. Things are moving here. Didn't like that. All right, what's going on here? Come on, Jim. Come on. Okay, I'm going to pause for a second. All right, sorry about that, but apparently I've messed up my thing here, but I'm finished, so I'm not going to waste 18 minutes of video to remake it again here, right? But the point being here is that, here, we have our expenses. We've added in an additional expense. So now we're going to do the math and we're going to put our total expenses in a right-hand column. So now, we have further, notice that I have like 3 columns now in the expense section instead of just 2. Right, so I hope you understood all of that. Watch the video again. Here is somewhat a matter of application and theory. Okay, we're expanding the concept of the theory and how it's actually applied. So if go back and watch this video again, but this is the way I would actually have done this particular financial statement, and I don't agree with the answer in the solution manual, but it is what it is. All right, so I'll see you in the next video.